Hi, good afternoon. Thanks for joining us. There's been a very sharp rally that we have seen from the recent close. Initially it was dismissed as a bear market rally, but now, we were so close to all-time highs, not just on the Nifty, but also in the broader market. Your thoughts?
Hi, afternoon, Anuj. Yes, that is true that there has been a significant rally of late in the last 2 months. But we have to bear in mind that I mean, the 9 months prior to June of this year, we've seen nearly $33 billion of FII monies go out of the markets, and the market still held up quite well. We were down probably 6 to 7%. Compare this to 2008 period where you had as much as 9 to $10 billion go out, and yet the markets were down 52, 53% from higher levels to lower levels. That tells you that the domestic investor has come in with gusto, and he's really been a pillar of strength for this market, and he's come of age. Now, when FI holdings in India are at about 17.5%, 18%, we've got to take our bets as to whether there is further downside in this holding or there is likelihood of upsides to this holding going forward. Lo and behold, between July and August, we've seen as much as $7 billion of purchase by FIIs. And in our judgment, room for FII buying is definitely higher than FII selling in this country. Look at any competing market where FIIs have the option to go to, whether it is Russia, China, Taiwan, Latin America, unlikely that they will buy just as aggressively in any of those markets. So India, in that sense, stands out. And there is still a lot of skepticism in the market. People have not participated, and they are holding back in the hope that the markets will fall. I think that this is a setup for the markets to really not give in to that expectation and, in fact, belie that expectation to the upside.
Yeah, I mean, that point about EMs in India, I put that up at sort of put out a detailed presentation about a week back. Anshul, great to have you with us here. Thanks very much. Afternoon. Just imagine the scenario. Market here goes up another few percentage points. We're at all-time high, maybe a week from now. And world markets, US markets, they're still down 15, 17, 20%. How does one describe that kind of picture, Anshul? In terms of, would that be okay? I mean, how would you describe that? And what would that mean for future returns from there?
Hi, Prashant. You see, money finds its route and its way. You will recall that in the period 2010 to 13, when the US markets, as also developed markets, were going one way and up, India was going just the other way, particularly in the broader markets in India, and India was going down. That is because the market sensed, and markets don't have an agenda. Markets are very clear that they're looking for correct economic activity, healthy economic activity. And they sensed that the Indian economy was tapering downwards. Inflation was up, current account deficit as also fiscal deficit were expanding, and hence India was punished. While on the other hand, many other emerging markets, as also the developed markets, were benefiting at that time. The situation has turned on its head as we speak, because money has found its way. Money has realized that India is in a far better situation today than it was in the period 2013. That our current account deficit has been in check, our fiscal deficit has been in check, and our inflation has been in check at a time when developed markets and other emerging markets are hurting on all these counts. That healthy scenario for our economy and our balance sheet is being given a thumbs up by the markets. We sense that if growth continues as we anticipate, and I must tell you anecdotally, I have been meeting companies in the last 2 weeks in conferences, and the body language that I see of many of these companies is unprecedented. I haven't seen this body language in the last 10 years. Of course, numbers are strong, but the growth estimates that these companies are giving for the next 2-3 years are so robust that if those numbers do come through, this market at this level will look like an opportunity. And if you don't invest, 2 years hence, an opportunity lost.
All right. Hi, Anshul. Valid point you make out there. You've been meeting a lot of investors. You have a pulse and you have a view as well on the IT space. A couple of technical guests joined in today and they were saying maybe post that correction, IT seems to have bottomed out with a longer time frame. Are you in that camp, or do you believe that the globe is still in very uncertain times? So you'd prefer to stay away and not get into these IT stocks, some of which have re-rated big time. Your take.
Hi, Nigel. I am in the latter camp. We've been underweight IT for most of this year. And our belief is that, as you rightly mentioned, the globe is uncertain. These stocks have re-rated meaningfully. Even after the recent derating, many of these stocks are still trading probably 15-20% higher than their long-term averages. It will take some time for this to get adjusted. Also, it will take some time for the markets to get adjusted to the new growth reality, because in many of these companies, growth has tapered off from expectations at the beginning of this year. And costs have moved up because manpower cost in this space has just gone up meaningfully. That contraction in revenue growth estimates, as also margin estimates, will take some time to be adjusted. And I'm a believer that this space in the near term will be not outperforming the India-centric plays. So I would be more constructive on India-centric plays than global-centric plays as we speak.
Okay. What about the automobile space? Because that's the one pocket where we had the biggest rally in the last 3 months.
Anuj, that's right. In the auto space, again, numbers are talking. In many companies, waiting of their products is as much as 6 months to 12 months. And in many instances, people are willing to pay extra to get the products in advance. Now, this is again a scenario that I haven't seen in the last 5-7 years. And this is despite the raw material costs having gone up. Of course, of late they've come off, but still they've been high for most of this year. Despite that, this is the kind of demand scenario that we are seeing. This only bodes well for this sector. I think that operating leverage will come through, as also the kind of products that are getting sold are higher ASP products. More SUVs are getting sold in the four-wheeler category. And as a result, there will be margin expansion as we move ahead. To that extent, this doesn't look like a flash in the pan. It looks like a 2 to 5 year kind of a cycle playing out just now. And hence, I would be constructive on this space. Yet, rural spending has not picked up. If that picks up, two-wheeler space will also start looking attractive.
Anshul, just to go back to that point, you said been meeting companies at various conferences, etc. Could you give us some color without obviously naming companies? What kind of businesses these are in? Is this largely on existing capacity, or is this a result of adding more capacity over the next couple of years, or new capacity coming on stream? And what are they telling you about, pricing power, demand? One of the things we heard from a lot of companies is that the lower and the entry-level segment across items is kind of slowed meaningfully. Premium segment is doing very well. So just some color would help overall.
Yes, Prashant, we think that it's a mix of many factors. Many companies which have added capacity already are seeing tailwinds on demand, and hence their capacities will get filled in due time. Some companies are at the cusp of commissioning new capacities. They are quite constructive. You were talking about the chemical space. It's unprecedented, the kind of inquiries that people are seeing in the chemical space, and also the capex that this space is seeing. Many companies will add as much gross block as in the next 5 years as they built over the last 50 years. And this is despite the last 2-3 years being extensively, these companies adding to their capex extensively. So this is a space doing very well. capital goods, new capacities are getting created, and for that, capital goods companies are enhancing their existing capacities and also servicing new requirements as they come through. Banking and finance, the kind of again the body language, the growth estimates in that space are something that we have not seen in a really long time, at least 5 to 7 years. And this is across segments within banking and finance. Defense. Defense as an indigenization play. If you speak with some of these companies, they are talking of as much as 3 to 5 times revenue upsides from current levels over the next 3-5 years. That is the kind of tailwind on order booking and on demand that these companies are seeing. So we are seeing general ebullience all across. To your point on the lower segments actually not benefiting so much as the premium segments, that may be true because rural economies, tier 2, tier 3 segments of the market are at this time not as their consumer sentiment is not as strong as the urban economy. But with the rains that have happened this year, we see that also changing. Come the festive season, probably you will see ebullience even in that segment. And imagine all this growth is happening despite that engine of the economy not working. Imagine what will happen if that engine starts working. So we seem to be in a very strong space at this time. And we would be more constructive than not with a 3-5 year time horizon.
Okay, all right. Anshul, a pleasure having you with us here. It's always good to get insights from you. Thanks indeed for joining us here on the program. So Anshul Sehgal with Perspective. 112 points on the market. So 17,946, absolutely steady still, although it's come off 20-30 points. But that's par for the course. It's been happening frequently from the morning, but always coming back. But that 100 points not gone, at least the 100 point, 3-digit gains have not disappeared for any point during the course of the day. We'll take a quick break here. We'll come back. We'll get you a quick check on what's happening in dealing rooms in our segment D Street Chatter with Nimesh. And of course, our technical expert will be back